ITC, of course, has been a big contributor, Nikunj, but you can't take your eyes off from the kind of erosion that Infosys alone caused on the Nifty with 110 points gone.
Yeah, 100 points plus for the Nifty in terms of an absolute crack. 100 points has only come from one single stock.
Yeah.
So if you take Infosys out of the equation, looks like the market yesterday had no trouble whatsoever. But you cannot do that. Markets have to be always looked in isolation. So is the collateral damage in Infosys big enough to turn the tide of the market? Which is that for a market which was nicely chugging along, will this crack in Infosys turn the tide of the market? I'll stick my neck out and say, I doubt. Because IT's net weightage on the Nifty is about 14%. We've already heard from Infosys, which has a big weightage. TCS is behind us, the price adjustment is done. Wipro and HCL Tech expectations are low, and Tech Mahindra becomes a special situation stock. So in terms of an impact, what you will actually see on the index per se, I doubt that the howler from Infosys will really change the rhythm of the market. But this market is showing signs of new leadership, whether it is ITC, Reliance coming up, L&T holding strong. So I would approach the market with a certain degree of value, certain degree of comfort, and with the assumption that at lower levels you want to be a buyer, and at higher levels, I don't think the levels are that high that you really want to start booking profits. You know, Aisha, there was a time when Infosys would sneeze and the entire market would catch a flu. That is not the situation. Infosys in isolation needs to be looked differently, and so there are two things here. Infosys in isolation needs to be looked differently within the IT space, and IT's impact on the net market per se is getting diluted because the net weightage on the Nifty is not even 20%, and financials have a much higher weightage. That's where numbers are strong. So I would say that what Infosys has done, it surely had an impact on the markets yesterday. That is not the end of the story for the market.
But I'm just wondering, I mean, how much more before you actually start nibbling into IT? And does it even make sense looking at the environment that, we are in currently, wherein growth is going to get challenged for IT? Now, the point that we were debating yesterday, whether it's an Infi-only problem or is it an all IT sector problem? We're yet to see that. Looking at TCS, it seems like as of now, it's an Infi-only problem. I mean, from the peak valuation of 33 on Infosys, we've shrunk to 20, from 35 on TCS to 24 now. So how much more before you even think of buying IT again?
So the way I look at Aisha is that IT is going through a slowdown, and it is going to be very case specific. The impact on TCS is much less than Infosys. Impact on Wipro is something which was visible 2 quarters ago. So it's not that all IT companies will get hit at the same time, but the trend in terms of the linearity, the trend is of contraction. I look at markets slightly differently. I was looking at it in the morning, and I looked at IT valuations pre-COVID, and I looked at growth valuations pre-COVID. What was the setup pre-COVID and what is the setup right now? Is the setup for IT worse than what it was pre-COVID? The answer to that is no. Are valuations almost there in terms of the pre-COVID levels? The answer to that is yes. So while the markets are giving an valuation comfort, I would say that in the short term, because of the price adjustment and because of the FI over ownership in some of the IT stocks, IT will underperform. Now, what do you do? If Infosys is down 10%, I think it's too late to sell. But it's too early to buy also because you're not really reaching what could be called as a comfort zone. So another 5-7% lower from here, large cap IT, especially a name like Infosys, becomes definitely attractive. Wipro you want to avoid largely because there is still work in progress. I'm not very sure which way the business trajectory is going to move. Tech Mahindra became the special situation stock, and HCL Tech is, I think, attractively priced even at the current juncture if you want to take a leap of faith for next 12 to 18 months. Worst in terms of the news, I think, is behind us. Infosys, the cat is out of the bag. You know the guidance. TCS, you know that they'll struggle with double digit. Wipro has been struggling. So the news is out. Now it's the price adjustment, which is a function of demand and supply. So 4 to 5%, 5 to 7%, I don't know, but I think IT will settle. If you're buying IT, you have to make an assumption that you're buying a sector which gives you a promise of 8 to 10% growth maximum. It gives you great corporate governance. It's not going to be a great multi-bagger from here. There is no cyclicality in it. But with IT, you're buying good corporate governance, great comfort and stability of 8 to 10% growth.
Yep, and we'll know about HCL Technologies in the next 2 days. The kind of weightage that it has on the Nifty is about 1.5%. But there are also other big numbers along with a slew of mid-caps that will be delivering their earnings later this week. You've got Reliance Industries that has a weightage of about 10%, and then of course ICICI Bank, which comes out with its earnings later on Saturday, and that has a weightage of about 8%. So all in all, this week, looking at the large caps, the total weightage stands at about 19.8%. So a lot of critical numbers as well, Nikunj, to watch out for and map out in the week.
Yeah, you know, when I started my career, we used to use this tagline, only Bimal. And I think that applies for Reliance because it's only Reliance this week in terms of the market move. And then you go to ICICI Bank. ICICI Bank, I think numbers are going to be okay. You pretty much know which way the trajectory is moving. Reliance becomes important given that Reliance has been underperforming stock and it has gained traction and it has gained momentum in last couple of days. The Reliance Financial Service listing, that is something which is around the corner. Hopefully, you'll hear something on the result in terms of when the listing of the Reliance Financial shares would move. So, in terms of weightage, this is not like a very heavy week for weightage. But in terms of the profile of the stocks, ICICI Bank and Reliance, that's crucial. Why? Because they, in a sense, are the leadership. ICICI Bank may have lost some shine, but it has been an outperforming banking stock, and Reliance has been an underperforming stock, which has gained some degree of mojo. So this earnings season would be important. Typically, earnings season will always start with IT, which has been good news in last 2 years. This time, the earnings season has started with IT, but the news has not been good. So are we in for a reverse surprise, which is a slow start and a great finish? It may happen because second half is always about cyclicals, metals, and PSU banks. The surprise is coming from there, unlike IT and private banks.
Yeah, clearly. Okay, and news in the city, Apple's own stores in India are a reality now. Beyond the hype and what these stores are set to offer, the development must be seen in the context of shifting global supply chains and India's push for manufacturing. In fact, Tim Cook is now highlighting 25 years of association with India, and ahead of the opening today for the public, Cook also met Reliance Industries chairman Mukesh Ambani and his top executives in the city, while of course, Madhuri Dixit as well took to Twitter to share them sharing a vada pav at Swati Snacks, Nikunj.
Yep. Vada pav at Swati Snacks. And I'm wondering, is it the Tardev branch or is it the Nariman Point branch?
Must be the Tardev branch.
Yeah.
I don't know, actually.
Yeah, but still pretty exciting with all those images, and it was nothing short of a party, it seems, as you did have the Apple store open, and it clearly seems like the craze for those Apple products in the country is only increasing day by day. So yeah, that's the first retail store. It's called Apple BKC in the Geo World Mall, and you did have Tim Cook as well, as you can see those visuals on your screen, who arrived in the financial
You know, I really hope it's more than just Apple store opening. I think when Tim Cook is here, he's not going to just come and stop at Apple store opening. I mean, this time he means business.
Yeah.
We understand that
He met Chandra, he met Mukesh Ambani.
He's going to meet the Prime Minister as well.
today.
Yeah.
No, so yeah, that's like the protocol. You meet industrialist and you meet the Prime Minister. But is there going to be any agreement in terms of going beyond manufacturing of just Apple phones? Could it be iPads? Could it be iPods? Could it be MacBooks? Because Apple, in a sense, post-COVID has been successful in making India as a base for Apple products, and they've started exporting Apple phone out of India. And I think the number runs into some $3.5 billion. Could there be another agreement, another indication from the government that we are ready to welcome you and we are ready to give you all the necessary ingredients which are required for you to scale up beyond just Apple phones, because we are looking at a different technology, a different complete supply chain. But Tim Cook in India, stores opening in India, him meeting the Prime Minister, and hopefully some indication that Apple is going to extend the manufacturing facility. It just tells you that the renaissance of manufacturing, Indian manufacturing, something which we've been talking about, is real and it is here to stay. I mean, one of the most sophisticated phone in the world is now being made in India.
Yeah, how cool is that?